And again, good morning, everyone, and thank you for joining us for our presentation this morning, provided to us by North American, Charlene Thardelson, the Sales Development Specialist, who has been with us on a number of our presentations this year. If you've been with us from the beginning, you are aware that we have been working strictly on assisting you as salespeople to learn the skills necessary to make sales on the life insurance side. And we did start way back in the beginning with just working on getting the initial information and gathering it for some field underwriting use and working with our clients, hopefully in their home, first of all, on a first visit to gather additional information on a fact finder or a needs analysis. We were able to determine products that would be a good fit. We work with illustration software. We developed a couple of different presentations for the clients that we had made up, the Anderson family. And we went through the process of presenting, closing the sale, underwriting, getting a policy in our possession, doing delivery, and probably most importantly, what I think most agents fall short of is doing what we're going to talk about today, and that's your client review. I know all of us as agents are always searching for new opportunities, but sometimes some of the best opportunities are still in our portfolio. Just as we started in the beginning saying that, if we actively use your book of business, perhaps from your health side or from your P&C side, to develop some life business, those are people that have a great familiarity to you and a comfort zone. And again, with the clients that we've already processed through the system, especially those clients that you've done non-permanent sales to, those term products, to go back and do a review and discover where you might have other opportunities. So with that in mind, again, I'd like to welcome Charlene. Thank you for joining us this morning.
All right. Well, thank you, Mark. And good morning, everyone. It sounds like you guys have been busy on this series. It has been a little while since I've presented. So thanks for that recap, Mark. Just to know what everybody's been going through, that's great. Today, we are going to focus on a client review. And I guess what I'd first say, knowing that of the audience, it sounds like life insurance is probably not your primary line of business, that it's health or med or P&C, whatever. That doesn't mean that you can't review a client's current life insurance that they have in place. They just might not be aware, they purchased a policy however many years ago from this agent or this place or whatever. They probably don't know that you can also help them with life insurance. And so, the numbers are staggering from LIMRA as far as how many individuals are out there that know that they need more insurance or want to buy life insurance, but they really don't know where to start. So if you can open up the door and let them know that you can also help them with that, whatever insurance they bought years ago might be outdated. We're going to talk about that. There might be new benefits that they can get by purchasing a new policy today, or maybe their situation has changed and they actually just need more insurance. So you owe it to yourself and to your client to help them, let them know that you can also help them with life insurance, and that they don't have to look any further. They've already got the relationship with you. So put your best foot forward, and together with the team at Messer Financial, they can help you, sort through the details to figure out what the next solution is for them. So I guarantee you just have to let them know that you also can help them with life insurance, and you're going to be able to get some sales from that. So with that, let's go ahead and get started. I guess we got a few disclosures here just to cover the presentation. But life insurance really can just be one of the simplest and most powerful forms of financial protection. I think when people are young, they don't really see the value or the need when they're just getting started. And they usually start off with something, through their employer, some, benefits that they just get there. But as soon as they start getting married and having children and having a home, they're probably right away underinsured because that insurance they get through their employer is usually a multiple of their salary. Maybe just one time, maybe half their salary, maybe two times their salary, and that might not be where it is to cover their mortgage and their children. If something were to happen to them. So and a lot of times people think that what they get way at the beginning is enough for the whole duration of their life, but things change. More children come along, a bigger house, more salary, and you're trying to protect all of that. So that's why no matter what they already have in place, it's always important to review that. Likewise, there's changes with life insurance products over time, and we'll touch on a little bit of that today as far as new benefits that are available, such as chronic illness or critical illness that can be included that can help satisfy another need that they might be concerned about, but again, they don't know where to get it. So what I've got in store for you today for the agenda is we're just going to touch on and describe the client review process. Then we're going to help you with how to position it and present it, and how to work through that, and then also just uncovering those sales, which I've already touched on a little bit. But we'll just build a lot more to that to those different subjects here as we go through the client review process. So your clients' lives change, and it's up to you to remind your clients about the importance of having the most appropriate life insurance protection at all times. And by taking the opportunity to reconnect with your clients and review their policies, you can determine if their current coverage is still appropriately meeting their needs. But if you don't have the conversation, how are you going to know if it's appropriately meeting their needs? So some of the things that are going to prompt a reason for you to review it, because when you're meeting with your clients for already your main source of meeting with these clients, you're going to uncover probably some of this information. They're going to share it with you. Like, have they had a change in marital status? Did they get married or divorced? Sometimes certain amounts of life insurance are needed in a as a result of a divorce. And so if they only knew that you could help them with that, they would have turned to you. Otherwise, they might just go wherever their attorney refers them. And then, of course, on a more positive note, when they get married, to protect that income for their spouse. How about a new home or a new job, a higher income, and a larger mortgage to protect? Their family is growing, um, and future planning. Maybe they have goals in mind as far as putting money away for their child's college, or their own retirement, or what they plan to do in the future. I mean, life insurance really can help with that. There's a cash value element in there as well. And then it could also be the current performance of or the performance of their current policy. So depending on what type of policy it is, maybe it's a term policy that's ending its duration, and they're going to be suddenly surprised when they get a bill that's a lot higher than the regular $100 premium they've been paying is going to go up astronomically once the level period ends. Um, so that could blindside them. Or maybe it's a permanent, like a universal life policy, and the performance as far as the interest, or maybe the cost of insurance charges the company has raised over time, and maybe they haven't been paying enough in, and now it's in danger of lapsing. So those are all things that need to be considered, um, uh, or a reason to talk with the client, and maybe if they have their last annual report, that's always a great place to start. So let's talk about when you're conducting the client review. I think on one of these calls in the past, and maybe you've done it again without me, but I think we've talked about some fact-finding tools. I mean, they're all over on the internet. Messer Financial, I'm sure, has sources as well. North American, we have them as well. I'll share that a little bit with you at the end. But there's different documents that you can use so that you're armed with the correct questions to ask your clients so that you can really uncover some of this information. So uncovering the client's goal, you've got to ask them some of these questions, and that might be, planning for their retirement, planning for their children's college education. How are they saving for that? Maybe they have plans to get married or build or buy a new home. So knowing some of the stuff that's coming, ahead of them will help too. Obtaining an in-force illustration. This can be really helpful and insightful as far as what the road ahead is meaning for their current policy. Now, an in-force illustration, that doesn't apply to a term policy, but knowing how many more years of the term coverage they have before the premium's going to skyrocket. But getting an in-force illustration, um, like I referred to a little bit ago, if the company that they purchased it from however many years ago, maybe that they've had to make some changes based on their death death rate experience on a certain block of business. Maybe they've had to increase their cost of insurance charges. Maybe they've had to lower interest rates. What it was forecasted to perform as, 10, 15 years ago when they purchased it, it might be far from that now. And so getting an in-force illustration, usually one of some degree comes with a annual statement or their annual report that they get each year. But that's a good thing to review to see how it's expected to perform if nothing changes from this point forward. And that's where you can uncover and see if the premium is too much or not enough, or it's only going to last for 10 more years and they really need the coverage for 20 more years until they retire. Whatever the situation is. So that in-force illustration can really, really be insightful. And then based on what you see and what their goals are, you can work to tailor a new policy to meet their needs. What kind of coverage they need, what their budget is. You really have to get down to asking the questions to make sure that you're proposing the best solution. Sometimes a client review can just be all that's maybe needed is to update the beneficiaries. Maybe when they purchased the policy 10 years ago, they weren't married and they had named their parent as a beneficiary. Maybe now they are married or maybe divorced. Or maybe, they had only listed one child and now they have three. The last thing that they probably want to have happen is to leave two of their three children out of the death benefit proceeds. And it's probably just slipped their mind. They just haven't even thought about the fact that they may need to update their beneficiary designation. So something as simple as that, I mean, that's gonna bode well for you when you can help them with that process. You might not be contracted and licensed to do business with the company where they currently hold the policy, but you can still advise them what they need to do, help them locate the phone number to call in. I mean, maybe that's all that needs to be done. That's still helping your client and providing value to them. But ultimately, you want to keep your eyes and ears open for some new sales opportunities. Whether it's for the clients themselves, maybe it's information they share with you during that fact finding, Q&A back and forth. Maybe they mention somebody that they're in business with, and maybe you could ask if that person has enough coverage. Could they introduce you to them to see if you could help them as well? Maybe they mention that their children are now growing and out of college and getting married themselves. Maybe there's an opportunity to provide the same type of financial resources that you've been providing to the parents to know to their next generation. So just keep your eyes and ears open for all of those signals, because your current client is obviously one of your best next customers, but each and every one that they know and talk to you about is also an opportunity for you. Some of the considerations that these clients may share with you too, obviously when looking at that in-force illustration or the annual statement, they might see those numbers going down year over year, and so they're concerned about that policy performance. That's a signal for you. Again, maybe that guarantee only lasts for another 10 years and they want it for 20 years, or maybe they're saying, geez, my family is really living long, and I originally only bought this policy to cover me to 85. Now now coverage is pretty common to go to 100 or past that. A lot of our products go all the way to 120. How about living benefits? Think about your clients who are seeing their own parents um, enter nursing homes and have the need for long-term care coverage and the growing cost that it costs to care for a loved one in a nursing home or even at home. So our products offer a chronic illness benefit rider, and they don't have to be confined to a nursing home. So rather than them paying a premium on a separate policy for that, they can combine maybe a couple of those needs by getting a life insurance policy that has living benefits. Life insurance isn't just for the death benefit anymore. When you have the living benefits and the cash value accumulation, it really can be utilized as another financial resource along the way. Conversions. So this goes back to term policies. When we talked about that, the level period of a term policy could be running out in the next couple years, and then their premium's going to increase. Maybe you could help uncover if a term policy is still convertible. There's usually a time frame. It's either based on the number of years since the policy was issued or the client's age. So again, if you're not licensed with that company, a conversion has to take place within the company. Um, Perhaps that's a reason for you to get contracted to help them with that. If we're talking about, say, a North American term product, then and you're with us, then that's easy. Then you can just help the conversion due to your current contract. But when you find out where the policies are, and then that's again, you work with your team at Messer Financial, see if they have a contract through that particular company, and you can get contracted to help them with that conversion. So some of the scenarios that you might uncover and might be able to help the clients with is they might be able to, just lower their costs because of the new and improved products that are out there, and you may be using a newer or um, uh, current cost of insurance table or mortality charts, they actually might be able to get the same coverage for a lower cost. I mean, who doesn't like to save money? I mean, we do that when we shop for auto insurance. I mean, you shop around for the coverage, and if you can pay less over here, then that might be where you go. We do it for our homeowners insurance. We do it for our appliances in our house. If we need a new washer and dryer, we might shop around and look for if we can get comparable and a lower cost. So if you can lower their costs and keep more money in their pocket, that's a great way to help them. Maybe they're already comfortable with the premium that they're paying, and it's not so much as um, saving them money, but really getting them more coverage that they need based on all of the needs and scenario that they've shared with you. So maybe paying the same premium will actually get them another $50,000 worth of coverage based on new CSO tables and products that are available today. We also mentioned that sometimes you could be improving the length of the guarantee. So for the same premium and the same coverage, you could stay with company XYZ and the coverage will last for another 20 years to, let's say, 80. Or you can move to the new policy, pay the same, have the same coverage, and it's going to go all the way to 120, something that they're not going to outlive. Enhanced policy performance that could include things like the living benefits that we'll touch on, the chronic and critical and terminal illness. Maybe it's the cash value. So there's a lot of ways to help them. So let's move into positioning and presenting. I think I've got a sample case here that we'll work through that might be a typical case that you'd run across here. So, so this example, we're going to focus on maybe a lower cost on the guaranteed coverage. So we've got a male, age 57, and he's still insurable. That's always something that you need to look at is, are they still insurable? If their health condition has changed, then you might just have to work with the policy that's already in place. But, work again with the team at Messer Financial and don't just assume that they're uninsurable. Um, they might be insurable with one company, maybe not another one. So use those resources to help see if there is a better home for this particular client. So we're going to assume that this guy is still healthy. He currently has a whole life policy of $50,000 worth of coverage that he's had for quite some time. Look at back in 1981. Pays $595 annual premium. A whole life policy that's got guaranteed values. So it's guaranteed not to do any better usually than what the stated guaranteed value is, and so that's also a spot where there could be some improvement. And guaranteed to endow at age 100. Not everybody knows what that endow actually means. Um, so here we are. The policy was purchased in 81. He's paying 595. Currently, there's about 15,000 in cash. At 100, it means to endow that the cash value will eventually get up to the 50,000. So the cash value will be equal to the death benefit. So live or die, he's at 100. There's $50,000 that for the policy. So let's see what we could do here. And our the current product is here in the first column. So we got our 595, and then with the original death benefit was 50,000, and with some dividends or paid up insurance that goes along with that, the current coverage is about 60 to 80,000. On the custom guarantee, which is our guaranteed death benefit product, here all we're doing is looking at moving over the 1035 money. So no additional premium, just bring over the 15,000, and we can guarantee the 50,000 to age 87. Now again, based on what he expects his life expectancy is, maybe that's cutting it too close, or maybe having the extra 595 a year money in his pocket would be good, but that's an option. The next option would be, let's bring the 1035 money over the 15,300, and let's increase the coverage. So going up to 75,000, the premium only increases by less than $30 a year. And maybe through your fact finding with him, found out that he would actually like to have a little bit more coverage. Now we have a rate band at 100,000. So once we get to 100,000, the COIs per thousand are a little cheaper. So sometimes it's actually better to go up to the next level, and maybe even if he was looking at, 85 or 90,000 here, it might be worthwhile just rounding up to the 100. So here we bring the 1035 money over, and to double his coverage doesn't mean we're doubling the premium, but we are increasing it by about $200 a year and doubling his coverage. And then these are guaranteed. Both of the 75 and the 100,000 are guaranteed out to age 120. So here we're highlighting the same product at different face amounts, but all having a lower cost, if you will, as far as if we were doubling, this. So that's an option. And everybody's situation is going to be a little bit different. So let's look at this next one. This person we're looking, same client, but we're looking to get more coverage for the same premium. So let's see what we can get here. Again, 595, and currently it's around the 60 to 80,000. And if we keep the same premium, because we can design them this way, plug in the same premium annually, bring over the 1035, we can now get up to the 73,000 of guaranteed coverage. Our guarantee builder, which is an IUL but also offers a guaranteed death benefit, can also increase that coverage from the original amount, and it has the opportunity to build cash value because it's an IUL product. So maybe when this client says they have a tax return, or they have some extra money, they like to put it in there, they could actually build cash value, and these numbers could go up. So maybe when they get their annual report, they're going to see like the performance and say, hey, this is paying better than my savings account. I should put extra money in there. All right, so let's look at another client here. This is a little bit younger guy, about 10 years. So we got a 47-year-old, and he's super preferred non-tobacco. Now he has a current UL policy that has having some performance issues. And by performance issues, it could be that the interest rates are not returning. Maybe it's a variable life, and there's been some years of loss. Maybe the cost of insurance charges have increased. So again, you're going to see that on the annual report and the in-force illustration. So currently, a $250,000 death benefit, paying $1,500 annual premium, and has about 17, a little over 17,000 of surrender value. So let's see what we can do for him. Again, this first column here is the current situation: 1,500 a year, 250, and 17.5. So a person who's had a policy for quite some time, one of their first objections is, but yeah, I got 17,000 in there, and there's no longer a surrender charge. Surrender charges are usually on policies anywhere from say 10 to 15 or 20 years. So depending on how long, let me see, did this one say how long he'd had it? No. So depending on how far he is in this policy, one of his main concerns might be, hey, there's not a surrender charge, and I really don't want to start a surrender charge period over again. Well, we have one product in our portfolio, and it's called the Rapid Builder, that has a waiver of surrender charge option. So this product would normally have a 14-year surrender charge period. If that's their main objection for not maybe wanting to move it, they want better performance, but they don't want to give up and start the surrender charge period over again, then this might be why you choose this product, because you can add the waiver of surrender charge rider on there to eliminate the 14-year surrender charge period. So here, we're going to keep the premium the same. We're going to do the same death benefit. And what he's going to be able to grow his cash value to at 65, he's currently 47, so just under 20 years, is his $17,000 is going to grow versus maybe the current policy, this was declining on the illustration. So if you can kind of freeze it in time and look at a projected, and this projection is probably based on not our highest rate. I'm seeing in the notes here these numbers are from a 6.5% assumed interest rate. So that's better policy performance for the same money out of their pocket. All right. Next here, additional items that you'll want to consider, which I just touched on the previous slide, was access to cash and those surrender charge periods. Depending on where they are too, I mean, because this guy was 47, and if he's not planning to access the cash until later, then maybe a 14-year surrender charge period is not that intimidating, or maybe seen on the illustration that it doesn't mean it ties up all his money, but it might prevent him from taking, 3,000 of it. Maybe the current surrender charge would be 3,000 in the first so many years. But looking at that, you might not need to put that on there. You might be able to choose a product that offers something else that without waiving the surrender charge. So you kind of need to ask those questions and see, okay, so what are your plans for this cash value in there? And maybe they consider the cash to be some sort of a account that they can access, if they need to. Maybe they're going to use it to buy a car. They see how it's funding, and they would rather just take the money out of there and pay themselves back rather than getting a loan for a car. Maybe they've been funding it differently, and it's going to be intended for college or for retirement. So you need to ask those types of questions. Maybe they're not even aware that they have the cash value there and really kind of forgot about that from when they purchased the policy however many years ago. But when there is cash, and if it's outside of the surrender charge period, you can usually do a 1035 exchange. That's a tax-free exchange from one life policy to another life policy, just like other vehicles, like a IRA rollover. As long as you move it from the same type of vehicle to the same type of vehicle, then it's just a transfer, and the IRS doesn't count it as you actually putting it in your pocket. So it maintains those tax advantages. So you can check on that. And it doesn't have to be outside of the surrender charge period in order to do that. But, maybe in this case, maybe there still was a $1,000 surrender charge. So of the 17.5, he's going to be able to 1035 16.5 because there was a $1,000 surrender charge, depending on where he's at. So those new surrender charges, if we're not talking about the policy where we waive it, then we need to look and see, what role that plays in it based on when they may or may not want to access those funds. We talked about change in health. Now, we don't have to think about change in health just being a bad thing, like that, boy, they're in worse shape now than when they purchased the policy 10, 15 years ago. How about the insureds who are actually in better shape? Maybe they've quit smoking. Maybe they've lost weight. Maybe they've improved their blood pressure and cholesterol with medication when before they weren't. So maybe their previous policy was rated or not at a standard or preferred rate class. So it could be the other way around. Maybe when they purchased their policy before, they had things on their driving record that reckless driving or DUIs that impacted the rate class at that point. Well, after more and more years and time that has gone by, those things don't hold the same impact. So think about not only that their health might have declined and might have been diagnosed with something, there are situations where their health could have improved. Keep your eyes open for opportunities to do conversions. And then also, do they have a good question to ask is, I'd like to review your current life insurance policy to see if you have the new type of life insurance or the old. You might say, whoa, what does that mean? Well, the new type of life insurance offers living benefits that are included at no cost. And that would be for the things like the chronic and the terminal illness, where they can accelerate the death benefit for their living needs if they become chronically or terminally or critically ill. All right, so let's show you a couple tools that can help you with uncovering the sales when you're meeting with the client. This chart is a little bit small here, but let me just explain it. The question can really be pretty basic because one of the most simplest initial needs for life insurance is to replace somebody's income. So think of a young family or any family for that matter. If something happened tomorrow to one of those breadwinners or income earners in the house, how would the other person be able to stay in the house or would they have to sell? What would happen to the care of the children? Depending on all those ages and the mortgage. That's really what you're looking at here. So again, I know this is small, but let me just tell you kind of how it's laid out. Years of income that you need to protect. So you're looking at how old is the client and like how many more working years they have. So let's say they're 45 and they're going to work till they're 65. So we're going to protect between now and there. That's 20 years. Then down this side is you're looking at what's their annual income. So it's just a nice chart that you can have available to use as a tool because um, a lot of people I think that they just need $100,000 of coverage or 200,000. But if you actually take 20 years and look at some of these numbers, let's just say that they're earning um, like this number right here is $42,000. They actually need to protect that income for the next 20 years. This is says 716,000 of coverage. So there are some assumptions that are listed here, that we're assuming that this amount below is going to, the 716 on a death benefit would earn 6% and then a 20% tax rate. So this would be assuming that the death benefit is paid and that the beneficiary spends down that over those next 20 years to help stay in the house, to help pay for daycare, to help pay for college, that kind of thing. So then you could take this and maybe you find out that they already have 250,000 of coverage through their employer. Well, then there's a gap of about just under 500,000 there. And that's where you can look as an opportunity for you to make an additional sale. So that's the other thing is it doesn't mean you always have to end the current coverage that they have. It could be adding on and in addition to what they leaving the other policy in place. So as far as those new opportunities when you're meeting with your clients, I mentioned some of this already, but now that they have children, how about insuring their children or grandchildren and locking in their insurability? So we'll insure a child as early as 15 days. And what if when they're 1 year old, something they could be diagnosed with something or you just don't know what the future holds. So if you can lock in their insurability, get a children coverage, maybe you've got grandparents that have RMDs that they don't need, and they'd like to use that to fund a policy for their grandchildren to help them with college. And those parents, the best thing for a parent to do when it comes to college funding is there's limits on the money they can put elsewhere, but here they can kind of kill a couple birds with one stone as far as protecting the coverage. And if something should happen to them, who would keep funding those college plans? So then putting the coverage on the parent for a college scenario, it would be ideal. But I also am a firm believer that you need to get those children covered before something sneaks up in their health situation. And it even could be just, doesn't have to be traumatic and devastating. I mean, how many children do we hear about with childhood diabetes? Or what about overweight? So if you can get them covered before things get out of hand, then at least there's some coverage in place so that they don't turn into an uninsurable risk in the future. And IUL products are ideal for this college and retirement planning. My son just turned 18 and is ready to go off to college here. I am getting him started with an IUL policy. And instead of him putting some of his earnings when he's working, he's already been a really good saver. I want him to start dropping $50 into an IUL policy. I'm going to also contribute, but when I look forward on this projection on this policy, the kind of money that he could have in there when he gets married or buys a home someday, that's money for him to access. Or additional money when he sends his own kids to college or for his own retirement. So I'm getting him started with one of those policies right now as an alternative to a better savings program for him while also locking in his insurance. He's going to be having college loans, so there's also the protection there. So the opportunities are just endless. You just need to, I hope that today has been really helpful to you as far as kind of getting some ideas and then just having your eyes and ears open for those opportunities. Now, you might not be armed with all of it right away, but that's where the team at Messer Financial is going to help you with. Now, I don't know how into social media you are, but if you're not, I would encourage you to consider at least getting active in some way, shape, or form. Facebook has been growing with the older generation. I would say my son is not out there much anymore. They tend to have gone to something else. But Facebook and LinkedIn are a way for you to interact with your clients. When they have a new child or grandchild, they're going to post that kind of stuff out there. That's an indicator for you to give them a call. Or they get married, or hey, look at our new home, or look at our sold sign. That kind of stuff. Those are all triggers. Keep your eyes and ears peeled there as well. LinkedIn, that's a place where Mark and I may connect professionally. But if I'm an agent, so Mark and I are in business doing similar things, and we have a connection there. But let's say I'm an agent and I do my business through Messer Financial, so I connect with him there. But now I'm an agent and I meet with a client who owns a business. He has a LinkedIn profile, and then all of those connections, are potential clients for you. So it's a way for you to interact and see some of this information. Now, you might see stuff on Twitter. I'm not a Twitter user, and the symbol here is YouTube. You might find interesting videos out there. North American, in fact, has a lot of information on YouTube. We do help you with content. So um, you so that you don't always have to be coming up with it on North American's website. Like, here's some Twitter posts for the first week of, this was a June plan from last year. So you can choose one or both of these. Here's a LinkedIn post. All you have to do is copy and paste this into LinkedIn. You don't always have to be coming up with the content. Now, some of this content, and again, I know this is too small for you to see here on the screen, some of the content is not all going to be about life insurance. It might just be about, like thinking this time of the year, it might be something about back to school or college. It might be an article on that. Just providing your clients some useful information will keep you front of mind for them. And then in a couple of weeks, when you post something about a life insurance, they'll be like, oh, yeah, I got to talk to that agent. That reminds me, I got to call him because I want to get this coverage. So staying in front of them, and we're here to help you with that. This is available on our website. North American has a YouTube channel. So if you go out to YouTube and search for North American company, here's an example of some videos that we have. These videos, you can see they're short, like between 1 and 2 minutes. These are videos that you might want to post on LinkedIn, or send in an email to your clients. Here, what kind of legacy will you leave? Think about your clients who are at that age that have the grandchildren, and they've got perhaps some money sitting aside that they do intend to leave. You could send them this video. Maybe we should talk. So how about the living benefits? Send this to some of your clients. It can be kind of a commercial, an opening to you being able to have a conversation. So great tool for you to utilize with your clients. North American has these marketing materials. I was going to show you this here too. We have the microsite. I think I've shared it with you in the past, but there's a home screen, then there's sales concepts. So if you drop down on this menu, there'll be a client review. If you need to get into some of the products or the living benefits, we also have web events company-wide for all of our producers. So maybe you'll find a topic out there that you want to attend. There's also a library of recorded ones. And then here's that social media page. There's a lot of information out there to help you to get started in it. And soon you'll start to see some of those results. Our client review sales concept kit has some brochures for you. This one here is a client brochure. Here's an agent guide. Here's a quick case study, but then also like in these documents is where you'll see like that fact finding sheet, like a questionnaire that you can kind of work through with your client. There's also one that you can give to your client and ask them to fill out before you meet, so that they can dig up some of that information so you can get a more accurate picture of their situation. So just to summarize, we talked about client review and how the value of conducting that can range from just updating beneficiaries to getting them better coverage at a lower cost or more coverage or extending a guarantee period. We talked about how you can use our products and position them differently. Maybe, that they don't want a surrender charge period to start over again. Maybe they want the coverage to last longer. Maybe they need more death benefit coverage, how you can alter and find the right fit for them and do a 1035. And then we talked about some of these tools that are available, including social media, to help you uncover those new opportunities. So the bottom line, what are you doing for your client? Well, you're getting them the appropriate death benefit coverage. You're addressing those life events that they had, maybe updating those beneficiaries, helping them meet their financial goals, because they may or may not have known that you could actually help them with this. You're already helping them with other things. Let them know that you can help with life insurance. What do you get? Well, you've got a sales strategy, lots of tools. This will help strengthen your relationship with your clients and get you potential referrals from them, while also uncovering new sales that you can earn commissions on. So I just encourage you that, if you haven't already had some client minds come to mind, take some time now after today's session, write down names. This says 3, but hopefully your list is so much longer. Or figure out different client categories that you want to focus on first. Maybe you want to start on your 50-year-olds. Maybe you want to start whatever. Segment them out and figure out who do you want to start calling, and then figure out a plan to make the calls over the next 3 to 5 days. Say, hey, it's a really good time. We need to probably sit down and review everything. Make sure that you've got the best coverage. And then, work with Messer Financial to find the right product solution, and then present that back to your client as a way to improve their situation. So with that, I'm going to turn it back to you, Mark. See if we got questions, and I know you always have a good recap too. So back to you, Mark.
Once again, Charlene, thank you very much for a wonderful presentation of information. We have a very good showing on this morning, a lot of agents out there, and I hope all of you were able to gain at least 1 or 2 bullets that are going to be advantageous to you. As we started with, and I mentioned that probably one of the weakest points for agents to take advantage of is the fact that you have a clientele that you've already done business with. But again, the reminder that Charlene focused on for you was to say, hey, it's not just your clients. You're going to run into people that have life insurance from agents that, unfortunately, for one reason or another, are no longer in the business, which is obviously going to be advantageous to you. It's a very simple process, if you haven't been through it before, to attain an in-force illustration, even if you aren't the agent of record. And that's the key thing. All you're going to need your client to do is call into the carrier, either in your presence while you're there if you want to do it, or have them do it later on after you leave and get it in their possession and get that enforced illustration and cause you to set another appointment and come back and review it. And that's going to be really detrimental. You just never know what's going to develop. Just recently, I was visiting with a client that was one of Neil's annuity clients. And I was just doing a little refresher over their current policies. And what came to my attention was I asked him, hey, what's going on with your life insurance? I really didn't see anything on your file. And we started talking about both the husband and wife's policy. And actually, to tell you the truth, he volunteered. He said to me, well, I've got this one life policy, and I don't know exactly how much cash value, but I was thinking I would just take that and just buy a single pay policy with it. And then I would add additional life insurance because I don't have the need for the size of the policy he had before. I mean, he threw that in my lap. So those are the type of things, again, you just don't know what's going to develop from whatever angle you're working with. But of course, most importantly, getting belly to belly with these people, and that's going to make your job easier with the discoveries that are going to take place. We've talked about in the very, very beginning of our work that we were going to focus on life insurance products that had living benefits, because I strongly feel and contend that any company that's not offering those benefits is either going to add them to their portfolio in the near future, or they're going to fall on the wayside. And again, we talked on the very basic change that can be made by asking that question: do you have the old type or the new type? And that's going to open that whole door. Again, great samples that you brought up, Charlene. Wonderful. And one of the questions that came up was, would this presentation be available? And yes, it will. It's going to be recorded. It will be put up on the Messer website under the agent resources, under what's called the Messer Learning Center. So you can go back and review, because those were great case study examples. Again, Charlene, thank you so much.
You are so welcome.
And, when you were working on that, and she hit on that little income protection, or the chart for your determination of salary income versus needs of insurance. We actually reviewed that with Charlene way back, months ago, when we did an income protection webinar, as if you were going in on your very first meeting of sales with the person. So all we've done here, while she's brought to your attention, is the ease of bringing that back out and saying, since we last met, of course, your salary has increased, therefore your needs have increased. So again, your door is just blown wide open for you to take it in different directions. What I really like, and it just kind of brought me back in time, to tell you the truth, was when you started talking about your son and his going off to college and using insurance as a better savings vehicle. And I'm going to tell you the truth, ladies and gentlemen, that's what influenced me in my insurance world many, many years ago, when I met with an agent that I have to say today was a great leader for me, a great example setter. And basically, that's what he shared with me. Why are you putting money in the bank? And at that time, the bank interest rates were pretty good, I'm going to say, because the market had collapsed on the real estate market, et cetera. But the bottom line was, he gave me the thought to say, hey, what better way to do than force myself to save? And that's what it is. It forces you to get into that position, and that's what the permanent products are there for. And by using them, again, it is a savings account, but it's a savings account with safety. That's so important. And then finally, the whole up and coming wave of social media. I think, again, Charlene, you did a wonderful job of really highlighting some situations with different forms of social media that agents probably are not taking advantage of and probably are going to need to become more and more familiar with time, because so many more people are being influenced and using the different social media programs that are available. So looking at the questions that we have, and one of those questions was, where do we find this income protection grid? Larry, unfortunately, do it. Tell us.
Yeah, let me show you something here, because I did intend to go over here. So let me make sure that this new screen is going to show. This is our, I'm going to post this. I think I can put this in the chat, this link, or you can also send it out to Mark. But this link right here, nalife.northamericancompany.com, NA-marketing materials, kind of a long one, so kind of hard to write down. But this is where I was saying that there's these sales concepts. So we had talked about that the client review is here, but for the income replacement grid, just go to the income protection sales concept, and it's right here. So click here to view. It's a PDF. It can be downloaded, printed, saved right from here. So, and I'll send you a copy of that too, Mark, just so you have it. So besides this link and this particular piece, go ahead and share that with the individuals, because, you know, here's where I went 20 years at, I think I said 42,000. This was the 716 that this individual needed. This is really handy to have with you. It's an eye opener for many.
Excellent. And yes, please do, and we'll get that out to you. And actually, someone further down in the questions actually asked the question, could you provide the link? So now you've answered both. Also, the same gentleman, Larry, was wondering about where those social media tools were that are available.
Okay, great. So let's go back here. So social media, this again is the same link. I mean, you don't need a username and password to get into this site. So it has a ton of information for you to use. Now, there's several pieces here. These are some videos, you know, social media recruiting. That's, I think, probably looking for agents. Getting started with LinkedIn, social media for financial services. These are going to be some short videos that you can use. But here's what else I would say on the web events page. This is where I said we say which live events we're hosting. We're usually doing anywhere from 1 to 3 in a month. But then there's this whole section on recorded sessions. So I think that there's something on this section on social media. Let me just look here. You can see that there's a ton. No, I guess there's not. So it is on that page. The other one is when you go to the North American Company website, which I don't know if I have it here on my shortcut. Let's see right here. But when you're on our North American Company website, so here you sign in, but and let me just sign in here real quick using my home office login. Oops. So when you get in here, and you'll be in here as an agent, what you'll be able to do is, let me see where it's at. Under life. I think it's under the training center here. No, maybe not. I'll have to get that to you. I'm at a loss right now on where it's at. I haven't been out here for a while. But, oh, it's right here. Sales and marketing, social media. So you're going to stay here on the life side, social media. And so I think what we were asked, the question was being asked is that content page. So here's agent content. This is if you're looking for more agents. So that's probably not what you want. You're looking for more clients. You're going to click on this. This is the August content. And here for the first week, here's a Facebook post you can put. It can be hard adjusting back into the routine of school after a couple months. Share these tips with your kids to start the school year on track. Or where do you start on back to school shopping? So see, not everything is about life insurance. So then if we go forward, then here's week 2. You know, it looks like summer's winding down, barbecue tips. You're going to have additional information like that. But see, then 5 things millennials should know about life insurance. And then, this links to the lifehappens.org site. So see, you're not always posting about life insurance. You're posting stuff that is relative to the time of the year or a holiday or back to school things that are going on. And then when you slip this in, they're like, oh yeah, Joe, he sells life insurance. I got to talk to him. So that's how it helps you stay in front of them. Or you can use this post. Use these building blocks to help achieve financial freedom. And what you do is you just copy this whole thing, paste it into your Facebook page, and then, it's got the hyperlink there that takes you to the rest of the article so that your clients can read it and then come back to you. So it's still loading, but I hope that was helpful as far as going to the North American website, and then we help you provide content. So back to you, Mark. How are we doing on the rest of the questions?
We've knocked out the questions, so we're getting close to our time zone. But most importantly, all of you, ladies and gentlemen, again, next week we'll be working on another part of the sales training work. And what we're going to do is get more in depth with the illustration software to do some more permanent product type illustration. So please join us for that. Very important also that you take advantage of your contracting, because getting an appointment with North American not only is going to make it much easier for you to access all the information you want to see, but be able to be prepared to offer these products when you're working with those clients, so that you can go ahead and start doing perhaps some conversions. We talked lightly about that. We talked about adding children to policies at the very early stages as child writers, but we mentioned at some point in time you do need to go back and you need to take those children off of that and put them on individual plans. So there's so much that you can do with the basic policy review within, again, your own existing book of business, or again, just taking on, looking at and previewing a policy that exists that perhaps another agent wrote, but is no longer active and servicing the needs of that client. Charlene, I can't say anything more than thank you so much. I know you've been with us, I believe, 3 times this year. Every one of them has been a great learning session. I hope for the agents, but I'm going to say honestly, I pull something out of every single one of these that I know I'm going to take back out in the field. So thank you very much.
That's great. Thank you so much.
All right, ladies and gentlemen, until next week, have a good first week in August, the last weeks of our summer. See you next Wednesday at 9 a.m.